Hello and welcome to this week's edition of Mortgage Watch. I'm Elon Auerbach of Unitrust Mortgage in San Diego, bringing you financial, real estate, and credit market news that you can use in your lives. In the top of the news this week, the GSE, the Government Service Bill, has passed the Senate, and that is the bill that is going to beef up the FHA and provide a lot of money to people who are in distress through foreclosure properties, etc. The Senate banking bill has passed this law, and it still has to go through and be verified with the House bill that was passed. Of course, there are some differences. One major difference is that the Senate version of the bill puts a permanent cap on Fannie and Freddie loans of $550,000. Now, that's still a lot higher than the cap was before, which is $417, but it's a ways down from the cap which was enacted temporarily, which was $700,000 and $729 in certain areas. So the Senate and the House still need to get together and work out the details of this bill. As we said before, getting bills like this through Congress, these are major moves. I know it's frustrating because it takes a lot of time for these things to come through. Just these are major changes in U.S. policy. So we have a couple more months before we're really going to see the effect of these things, and these things actually become law and are able to be have a positive effect on the lending landscape and the housing market. Congress has also moved to license mortgage brokers. Many states do license them and many states do not. But the Senate has now passed a bill, actually one of the committees, that insists that all states have mortgage licensing for brokers and for loan officers and for lenders. So there'll be a national database. It's amazing to me how stupid a lot of homeowners are when it comes to refinancing, and how they seem to trust people that they normally wouldn't give the time of day to deal with, something as big as a home loan for themselves and their family. A lot of people, end up dealing with less than reputable characters because they didn't do any screening or anything else. And hopefully all this attention is going to make them a lot more aware of what's going on. And this bill is going to require a national database, which we think is very, very important. Interestingly enough, there's been data now that the housing slump has hit outlying areas a lot more than downtown areas. Statistics are showing that the far-flung suburbs and exurbs are a lot more affected by the housing downturn than closer-in neighborhoods and so on. I'm sure gas prices have something to do with it, and there was a study done that shows that rising gas prices are also affecting, as people who used to commuting an hour or so are now realizing that that's adding up to a much higher commuting cost and gasoline cost. So that nationwide, closer in neighborhoods have less of a downturn than way outlying areas and bedroom communities. So that's an interesting piece of information. For those of you out there who are considering buying a house, and again, this is a real good time to buy, rates are still very, very good. There's some insight for you about where you might look in your particular area. Some other mortgage bankers have announced losses. Impact Mortgage, which is actually a REIT, which is publicly traded, has announced a fairly large loss of about $2 billion, and they cannot trade or sell any of their products. So they're basically stuck with it and riding it out until things change, which is probably going to be about a year. As I mentioned, the Senate bill that would cut the size of Fannie and Freddie is still going to be negotiated between the Senate and the House. So right here and now, there's no impact. This is all future information and future law. Until December, we have the higher loan limits in any case. So we'll see, where that goes in the coming months. Good news, and that is that Freddie Mac has announced that it's following Fannie Mae's decision that they're not going to have a declining markets adjustment. As we've mentioned in the past, because of what's going on, Fannie and Freddie have both announced that in declining real estate markets, there's a 5% cut in the value of the program, which makes it really hard to get higher loan to values. That's going to change. It starts July 1. Kathy, our underwriter, mentioned to me that some of the investors and the mortgage insurance companies aren't following suit, but I'm sure that Fannie's going to figure out how to add a premium that maybe it'll bypass the mortgage insurance companies, because I know that they're under a very, very important mandate to try and get higher loan-to-value loans in effect. So the highest LTV they will do then will be 97% on most programs and 100% under the Home Possible program. So that is really, really good news and should help beef up the housing market. And even better news from Fannie and Freddie, there's a whole new set of guidelines coming which will really, I believe, pump up the housing market. Fannie Mae's been talking about this for a while, but they've gotten the green light. So there's 4 changes coming that I think will be very, very important. The first one will enable borrowers to refinance their mortgage up to 120% of their property value. So if their property value has dropped up to 20%, they'll be able to refinance at their full mortgage amount if they're current on their current mortgage. And we have clients in that situation. There's nothing to do for them right now, but starting June 1, it's going to be in effect, which is very, very positive news. Again, it takes some time for it to all trickle down and for these programs to be recognized in the mortgage marketplace. The second program is going to establish a rent-to-own through the government, through Fannie Mae, for foreclosed homes, which will help to get those off the market by setting up a local program. And they're going to give the states $10 billion to get qualified first-time buyers in those homes. You know, in California, we have California kind of land loans where it enables people to buy a home that is rent a home that's owned by the state. But this is going to really bring this thing out nationwide and probably move this along, our market along quite a bit. Other good news is that they're going to try and price the new conforming jumbo, that is loans up to 700 or 729, at the same pricing as conforming loans that are up to 417. As most of you know, the conforming jumbo product has been priced higher than conforming loans. It's still better than where that market was, but this new news is really going to help that market. If jumbo homeowners are going to be able to refinance at the same rates as conforming pricing, that's probably going to really spur refinance in higher value areas like California, the Northeast, Seattle, parts of Florida, and so on. Well, it was announced also by the Federal Reserve that further interest rate cuts are probably unlikely. They did cut another 0.25% on the interbank lending rate, but that's probably going to be the max that they're going to do. You know, in the past, everyone looked to Federal Reserve interest cuts as the thing that would just drive the engine and pull the horses pulling the wagon. But right now, it's really waiting for the FHA and the Fannie Mae and Freddie Mac bills to make their way through Congress. That's going to see the most change. In other news, UBS, the giant Swiss bank, has sold off about $22 billion in subprime mortgages. And interestingly enough, they sold them to BlackRock, which is a Wall Street firm. But they also are lending BlackRock the money to buy the mortgages. So it's kind of like a rent-to-own. They're sold the mortgages, they lent them half of the money of the value of the mortgages. They just don't want to deal with it anymore, and just they're done with it. They passed it on, and they're done with it. There'll be more of that coming. It seems like a giveaway in a way. But whatever it takes between government programs, private industry selling off, troubled loans and so on, it is going to change because it's cyclical, and we'll see some changes coming. But again, it's probably going to be the third or fourth quarter before these things really take effect. So with that, we'll look forward to seeing you next week. We will do a special segment that will be posted on YouTube and on our website on the Home Ownership Loan Corporation, and really you'll find it fascinating to see what they did and how they did it and how troubled things were when they first got started and how large the problem was in relation till today, and what a great job they did of cleaning things up. So again, keep up a good cheer, help is on its way, keep a positive outlook, enjoy the long weekend if you're able to, and we'll look forward to being in touch with you next week on Mortgage Watch. Thank you and take care.